CNBC TV 18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay from the Delhi studio. It was such a comeback rally across the Asian markets on Wall Street as well, of course, on Indian bourses. We were firing on all cylinders, led by some spirited dovish talk from Janet Yellen. Hi, Surabhi.
Hi, Lata. Let's just hope that this really lasts. I guess that's what's on everyone's minds. Let's quickly run through the top stories. The US Fed spoke dovish again and enticed the bulls back to the party. The Nifty and the Sensex are up 1.5% each. All sectors end in green. Banks, infra stocks have led from the front.
Mid-caps outperform heavyweights by a huge margin. Mid-cap index surges 3%. NBFC stocks rally as bond yields dip. And jewelry stocks like PC Jewelers and TBZ surge as rupees recovery dims fears that gold import curbs will be back.
City gas distribution plays like Gujarat Gas and IGL surge between 2 and 8% as CNBC TV 18 learns exclusively that City Gas will be given top priority in the proposed new gas utilization policy.
Well, those are the headlines and here are the experts that we have lined up on the show for you today. Market perspective from Nirmal Jain of IIFL. Adrian Mowat will also be with us to talk about the global picture. And as always, Sudarshan Sukhani will join in to talk about the technicals.
Before we get to all our opinion and action, let's move to the day's trading arena. The Lal Street was dancing to global tunes yet again, spurred on by the Fed statements. Global markets rallied and bulls back home took a cue from that, breaking out of their shackles after 5 down days. Anuj Singhal joins in with the latest. Anuj, what a day.
Well, big pullback for market today on back of what happened globally, and all of this because of the Fed statement. So the market rallied over 100 points on the Nifty, over 400 points on the Sensex, and the mid-cap index was up actually about 3% or so. The rally was broad-based, but the leaders of the market were financials and commodities. So ICICI Bank, Bank of India, Bank of Baroda, all these stocks, Punjab National Bank, were up in the green. On the commodities side, you had stocks like Jindal Steel, Cairn, GAIL. All these stocks were gaining, ONGC. And finally, in the mid-cap side of the market, big gainers, Ashok Leyland, Arvind, PFC, Mastek, JK Tyre, and HDIL.
Point taken, Anuj. All kinds of sectors were rallying in the mid-caps as well. You had sugar stocks and you had tire stocks. But I want to pick up on the bond yields falling. The bond yields have fallen from 8% plus to about 7.9%. And you saw that in all the NBFC stocks. REC rose 5.5%, 8.5% rally in PFC. LIC Housing, another old favorite, again rose over 5%. Gold stocks were up and that was because the rupee stabilized, rising all the way from almost 64 levels to 63.18 levels for a better part of the day. And that meant the fear of gold control, gold import controls were gone. Look at the way TBZ performed 7% higher. PC Jewelers must have seen up over 10% and Titan up 6%. So literally all sectors firing.
Absolutely. So money markets and of course their fallout being felt in equities as well. Time now for some market perspective. Nirmal Jain of IIFL says that 2015 can emerge as a good year for the market and leading the rally would be bank stocks. Listen in.
I would say that 2015 can be another very good year. It may give you say 20 to 25% very easily, and if we are from the market perspective, in an optimistic scenario, it can go up to 30% also. The banks will be one of the key primary drivers because this crude oil and inflation will have an impact on interest rates. So whether the rate cut happens in January or March, that doesn't matter. But the fact of the matter is that the lending rates as well as deposit rates are already heading southward. And so banks will be one beneficiary. On one hand, we may have a domestic strength, but dollar is strengthening for different regions. And IT companies in terms of valuation still aren't very expensive. And in fact, they are also good hedging bets in the portfolio. So I would look at IT and pharma also. The crude oil prices are going down, so the ONGC and Cairn will be negatively impacted. But if you want to buy oil and gas, I would say wait for December results. So if you want to invest in oil and gas sector, watch BPCL, HPCL. But if you can wait for some time, then wait for December results. And next quarter you can consider buying them.
That's a great medium-term view and selection of stocks. Now for All the action from the futures and options space today. Let's go across to Nigel D'Souza.
Well, finally, the long-awaited move on the Nifty came in the northward direction, and that was good news for a few bulls because they were making a case when they can write some puts finally and make some money. So the 7,950 put, the premium over there fell from 40 bucks to a fourth of what it was when we started, while the 8,100 put as well was being written. The premium was, when we started trade, was at around 90 bucks. It ended sub 30 rupees. So traders are making a case when they're looking to protect that 8,000 to around 8,050 mark. Now, there was call shedding as well. Remember, in yesterday's trading session, there has been call writing over the past few days. So the 8,100 call was being written. In today's trading session, all those writers, they unbound their positions and they got out of the market. And that's precisely what happened. Because take a look, the open interest was lower and the premium jumped up from around 111 bucks to around 180 plus rupees. Well, there was some out of the money call buying, and that made you money. So the 8,250 call as well as the 8,200 call, the premium on both those two strikes jumped more than twice of what they started at. So that was good news for some of those call buyers. After a bit, they're making some money. The India VIX, as expected, the Nifty was up more than 100 points. So it was down close to around 10% by the time we wound up. And take a look at individual stocks, the likes of HDIL, Adani Palm, Unitech, all of them high beta. They've got spanked in the face in the last few days. Today, all of them came in for a big short covering bounce. And some of those quality names, stocks that have been doing well, they took a bit of a brief correction. But today, they were back on the buying list. So Ashok Leyland, PFC, and the big boy over there is SBI. That was fairly active. It continues to see buying interest. That's what has been holding one end up. No different today. So that bank, in fact, saw buying. While on Allahabad Bank, the high beta counter, that one came in for a bit of a short covering bounce.
Okay, Nigel, thank you so much for that. Let's move on to the other big story that the market was following today. It's the Cabinet's approval for the Constitutional Amendment Bill for GST. Now, the bill is expected to be tabled in the current winter session of Parliament. And to get a sense of which sectors and which companies could benefit the most from GST, we have Pragya Bharadwaj now joining in. Pragya?
Well, thanks a lot for that, Surbhi. Pretty much hands down, all of the experts that we spoke to have called this a milestone for our economy and for the country. They've called it a very positive and a welcome step. Of course, the specifics are a little sketchy at this point. The rate's been changing. Last time our sources were talking about a 24% rate. But that is the one key revenue neutral rate that the street and the corporate sector will very closely watch out for. They believe, and pretty much all of the corporates that we spoke to indicated that if the rate is on the higher side, that could actually negate the benefits of GST. Now, since the crux of GST is to shift from tax optimization to operational efficiency, that would entail a lot of benefits for the corporate sector, a few of them being the savings in the supply chain costs, lowering of the manufacturing and the logistics costs for them. A much simplified and a simplified tax structure would also free up a lot of the resources for the companies to actually put into the other divisions and business verticals. Not just this, for the organized sector, this would improve the competitiveness versus the unorganized sector and flow down to the bottom line of the company. So with that background of all of these positives, the few key sectors that will benefit out of this will definitely be the logistics sector, something within the FMCG or an auto space, and even an organized retail for that matter. For the FMCG companies, all of these companies spoke about the fact that a warehouse rationalization, since there will be a shutting down of all of those inefficient warehouses across the country, would lower the logistics costs for these companies, and a revival in the GDP would actually boost the demand for the consumer goods. For the organized retail companies, the companies will be able to offset the service tax that they've been paying to the suppliers from the sales tax that they are paying currently. And of course, all of this would actually mean a much increased demand for all of the warehouse and the transportation services, which will definitely entail a lot of benefits within the logistics sector. So companies like Gati, Transport Corporation of India, All Cargo Logistics, Snowman Logistics, all of those companies will be key beneficiaries. And all of those stocks from the FMCG, retail and the logistics space were big buzzers in today's trade. So, it's not just the economy, but, there's a whole host of benefits lined up for the corporate sector as well. Back to you.
Thanks a lot for that, Pragya. Well, the Cabinet's decision, which was taken last evening and that Pragya alluded to, has been welcomed widely by India Inc., which sees it as a big milestone for the Indian economy. Let's hear out some of the big names in India Inc.
We have to see whether it clears the Rajya Sabha, because that's where one more hurdle will come in. But I think clearly this is a big milestone which the government has crossed. I think there are some more milestones before GST comes into effect, and these milestones are related to the rate structure and the exemption structure, and particularly the IT backbone.
I think it's a very good development because GST being passed will be a big stimulus to the Indian economy. I think the GDP growth will go up by 2 percentage points, other things being equal. So it's very good news. And the good news is now the states and the center are aligned. And the center has been generous with the requests of the state. So I expect this to move through quite fast.
All right, now let's shift focus to news that we got overnight from the U.S. Federal Reserve, and that really was the reason behind this mega global rally. In its policy statement, the Federal Open Market Committee, or the FOMC, signaled that it is likely to initiate interest rate liftoff in mid-2015. This despite the turbulence in the financial markets at present. The FOMC emphasized that the slack in the labor market continues to diminish. Headline inflation remains below the long-run 2% target. However, the FOMC attributes this underperformance to a sharp decline in energy prices. Listen in.
The FOMC reaffirmed its view that the current 0 to 1/4% target range for the federal funds rate remains appropriate. The committee also updated its forward guidance for the federal funds rate, indicating that the committee judges that it can be patient in beginning to normalize the stance of monetary policy. This new language does not represent a change in our policy intentions and is fully consistent with our previous guidance, which stated that it likely will be appropriate to maintain the current target range for the federal funds rate for a considerable time after the end of our asset purchase program. Inflation has continued to run below the committee's 2% objective, and the recent sizable declines in oil prices will likely hold down overall inflation in the near term. But as the effects of these oil price declines and other transitory factors dissipate, and as resource utilization continues to rise, the committee expects inflation to move gradually back toward its objective. In making this forecast, the committee is mindful of the recent declines in market-based measures of inflation compensation. At this point, the committee views these movements as likely to prove transitory.
Okay, so those were the words that drove the markets higher. We'll take a break on that note, but coming up, Sudarshan Sukhani will join in for a technical chat and we'll get to some trading ideas as well.
CNBC TV 18, celebrating 15 years of leadership.